All right, so last week I did a video about Fiverr and rated Fiverr stock buy. And of course, every time I do a video about Fiverr, many investors are curious about Upwork since it's a similar business and ask me if I could do a video about Upwork. So that's what I'll do here in this video. I'll evaluate Upwork and update my buy or sell recommendation, share with you my fair value calculation. This is a business I've been following for several years. So I'm really excited that investors are becoming more interested in this gig economy platform.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So this company has demonstrated an excellent amount of revenue growth over recent years, increasing from 164 million in 2016 up to 773 million in the most recent trailing 12-month period. One of the reasons I've been bullish on this company in recent years is the tailwind benefiting the platform, the gig economy platform. I think a lot of individuals are interested in this type of work instead of full-time work where you don't have control over your time, you don't have control over when you take a vacation. And so a lot of people are interested in a gig economy type job or participating in the gig economy instead of having regular full-time work. Now, it's not for everyone, I understand, but there are a lot of people who prefer this kind of work. And also a lot of businesses prefer to hire individuals in this way instead of hiring individuals full time. So that tailwind, I think, will lift demand in these categories and Upwork will benefit as a result. Now, the big risk here is artificial intelligence, and many investors are fearful that AI will take away that demand from enterprises who will just use AI instead of going to the gig economy platform to hire these services. Now, I've been of the opinion that some of that will happen. There will be some replacement, but there will also be different types of jobs that are created as a result of artificial intelligence. So some of those folks that are providing the services on the platform will learn to incorporate AI into their own services and thereby offer better services or offer more value or offer AI related services. And so there will be an offset. There will be some types of jobs that are lost, and then there will be some new types of jobs that are created, and overall demand on the platform, I think, will be a net positive, which is what we've been seeing so far. From Fiverr and Upwork, the management teams have noted that they've seen an increase in activity, a significant increase in activity in AI-related jobs. So I turned bullish on Upwork around 2023. So if you know my investing philosophy, you'll know that I don't like companies that are doing this, what Upwork was doing from 2018 to 2022, where as the revenue in the business was growing, they were just losing more money. Their return on invested capital was just getting worse. And that was the case between 2018 and 2022. So I didn't have this stock rated as a buy back in those years. Of course, back in those years, I was writing articles. I wasn't on YouTube, but I was writing articles about Upwork and saying that I didn't think the stock was a buy back then. But starting in 2023, when they turned things around, right? First, they announced the big strategy change in 2022. Like many tech companies, when the central bank started increasing interest rates, they started really focusing on cost because the cost of capital was increasing. And so if you're losing a lot of money on the bottom line, the cost to raise money or the cost to borrow money was increasing exponentially. So you really had to get serious about cost. And that's what Upwork did. And it's turned things around. And now they're significantly profitable in terms of ROIC at above 40% for, the previous 18 to 24 months. So since then, I've had the stock rated as a buy. So now let's look at the valuation. According to my intrinsic value per share calculation, the fair value of this business is around $18.30. Current market price is $17.34. The share price is up over 3.5% today as I'm recording this video. Now, when I go back to fiscal.ai, which is my preferred data provider, they're trading at a forward PE ratio of 13, which I think is cheap for a company like this with this kind of revenue growth and this kind of return on invested capital, the platform business model, and the growth tailwinds behind this company. Of course, the reason why it's trading at such a cheap valuation is the risks related to artificial intelligence, but I think those risks are overblown as I'm seeing early evidence of what the changing behavior is on the platform, both sides of the equation. So I'm liking what I'm seeing so far. And so for all those reasons, I updated and I reiterated my buy rating for Upwork stock today, October 8th, 2025. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.